Today on Everyday Ordinary, I'm going to share a clip with you from a phenomenal conversation that I did not expect with the tax preparer, Mr. Antoine Anderson. This is something that you do not want to miss. Please continue watching. Tax season is around the corner, and I mean that hypothetically. But say, for example, tax season is around the corner. Generally, most people in the United States look at that around that April 15th time. So how would you recommend an individual and a new business owner prepare for that? What are some of the things, you don't have to give a laundry list, but just some of the main things that you would say they should do to prepare for that?
Okay. There's three areas that three-step process, in my opinion. The three-step process is you want to start preparing the year before your taxes are due. So for instance, 12/31 is your cutoff date that you say, if I haven't done it by 12/31, it's over and done with. Now I'm filing that 12/31/20 tax return in by April 15th of 2021. Or whatever. In this year, the 12/31/21 will be due April 15th of 2022. So you want to start sitting down and looking at your business or your individual taxes in the prior year. Why? So you can make adjustments and changes. How much do I currently owe right now because I'm a high income individual? Do I need to make estimated tax payments? What are the estimated tax deadline dates? Let me give you a couple of those. Let me give you a couple of tidbits. For an individual, April 15th, June 15th, September 15th, January 15th of the next year are the estimated tax deadline dates. For a corporation that files taxes, March 15th, June 15th, September 15th, and December 15th. Those are important dates because if you owe more than $1,000, you will receive a penalty from the Internal Revenue Service.
Wow.
So you want to make sure that you meet those deadline dates to file an estimated tax payment with your business or yourself as an individual. After you start looking at doing the individual year and you're getting ready to go and say, hey, I'm ending with my 12/31 year, and now I'm in between that 12/31 and that 1/15, that's my last date that I can get estimated tax payment in for the prior year, so I don't owe. That's an important and critical time. During that time, after that time, start looking for your documents to be available via online through logging into the company's web portals to pull down your tax documents, or look for it to start coming in the mail, and that'll be somewhere by the end of January 31st. The reason being is all companies have to have it postmarked by January 31st. Your W-2s, your 1099s, your mortgage interest statements. So start looking around that time between January 15th, end of February, to start looking to receive those documents. Now, do everyone make those deadline dates? No, they don't.
Right.
But they're supposed to. And then that'll help you start pulling all your documents together. Have all concise order. Look at your prior year tax return to say, hey, I did this last year. Did I do it this year?
Right.
And you want to have all those documents together, put in a nice, neat package, drop it off to your accountant, or have it right there with you and do a comparative every time you do your tax return, this year to last year. Because that's what the Internal Revenue Service, when it goes through their system checks, they're going to do a comparative to this year, last year. Were there any major changes? Last year, you gave away $1,000 in charitable contributions. This year, you want to put down that you gave away $20,000. Don't do that.
Yeah.
Don't do that. That's a red flag waiting to happen.
Okay.
Yeah.
Well, the way you answered that, once again, I thought it was great. But I also like for you to tap into the answers that you offer. They felt like they were for people who are experienced, who have been paying taxes for a period of time, whether it be as a business owner or not. I like for you to tap into as an individual, and we're talking about that age group between maybe 18 and 22, whose education is extremely limited. They're relying on parents and friends, and sometimes they may not be paying attention that much when they're talking. So I really want to kind of just tap into that space on, just the bare basics.
Yeah. Let's go deep. So, and when I say let's go deep, I mean a lot of individuals that are 18 years old and just starting off, or even 16 and starting off. Keep in mind, under today's current tax structure, there's a standard deduction of $12,000 in the United States for you to file your tax return. And anything under $12,000, you can file that tax return and not have to, in most cases, pay taxes. So if any monies are withheld, it's good to come back to you. Now, keep in mind, individuals that, and these the young ones at 16, 18 years old, there is a tax that's going to be withheld from your check called FICA, Social Security and Medicare. You do not get that back. That goes towards Social Security and Medicare, so it's required. I claim exempt. You will never get out of Social Security and Medicare unless the government authorizes it. But what you want to look at on your pay stub and on your W-2 is box 2 and whatever state box there is, preferably probably box 18 in most states on your W-2, and it tells you how much tax is withheld. That is what you're looking at to say, when I'm filing my tax return, these are potential monies that I can get back, or I don't have enough there, and it could be monies that I owe. So you want to definitely look at those boxes there. Work and talk to your parents or the person or the guardian that's going to claim you. There are certain times, and when I say let's go deep, when you're up to age 16, you get a dependent care, a child tax credit. But when you turn 16, after 16, 17, 18, there is none for your parents. But then when you go to college, you get an educational credit if you choose to go to college. Now, a lot of persons come back and say, the individuals, well, Mom, Dad, you're getting an educational credit, and some of that money is mine.
Wow.
And then the parents most likely are going to respond and say, okay, then I'll give you the educational credit, and you go ahead and take this student loan that I'm getting taken out for you. You take that with you too as well. And when it's time to sign. So keep in mind, there's a give and take. That's my point in what I'm trying to make. Yeah. Don't be so fast to go out and file your tax return. Work with the person that's claiming you, because it's going to work to your advantage to be able to help you later on in life.
That's major education. Hey, look, everybody, I ain't gonna lie to you. I feel like I'm learning, because I've heard some things that I'm familiar with, and I've heard a number of more things that I've been unfamiliar with. So I will be rewatching this a few times to increase my level of education of things that I just wasn't aware of. I'm very thankful that he was able to share that.
Yes, and you're welcome, and I hope that I'm helping out a lot of individuals. And let's keep one thing in mind. There was something else that I wanted to definitely mention. You can file a tax return for an individual at just about any age. There's what you call a kiddie tax return, that when you're 13 years over, you may have interest from your parents if they had lucrative investments and they're doing things now. A lot of people are in virtual currency and they put it in the kid's name. You have to be careful of that too as well. There's a generation skipping tax that you can get deep into a conversation on.
Wow.
There's a tax return that has to be filed for children, and then that could also cause an issue later on when it's time for them to go to college, that they have to put down that I have a bank account that has all this money with this interest on my tax return. And when you start having interest over $1,800, and you say, well, I never have that. Well, yeah, if you do, if you have a mutual fund and then you have a bank account, so you never know. Right. So that's what you should aspire to. But always keep one thing in mind. Don't run from taxes. Don't run. Embrace it, understand it. My conversation is two things. For every dollar, you may pay 20, 22 cents, or 30 cents on that dollar. That's the glass half empty. The glass half full is, I still have 70 cents or 75 cents. Now I want all the money. I understand that. That's why you come to an individual tax preparer such as myself or a professional to make sure we lower that 20, 22, 28% down to 12, 15, and 18%. That is when you come to that individual to try and work on that. Nice,
nice. Hey guys, my man, he is crushing this. Seriously, crushing this. So again, in this section again about preparing for tax season, and as an individual business, new business, existing business, or just individual. If you have any questions, any concerns, add it in the comments. Let's talk about it. Let's have a discussion. That was great. That was great. But we have a little bit more to go. And